Welcome back. Crude oil fell the most in 3 months today after a government report showed an unexpected gain in U.S. oil inventories as imports jumped. Brian Hicks, portfolio manager at U.S. Global Investors, invests mainly in energy companies and expected healthy inventory levels. He joins us now from San Antonio, Texas. Brian, welcome to Bloomberg News. And first, let's begin with your thoughts on that announcement today from the Energy Department. Any surprises there for you?
Not really from our standpoint. Inventory levels, not only here in the U.S., but as well in other OECD countries have been quite flush. We have had a string of weekly declines. This week's report offsets that number, but we're a little bit more cautious on oil here. We think that the heavy inventory levels will probably weigh on the price of oil, keeping it capped at or about $70 a barrel. We probably won't see a meaningful rise in crude oil prices until the end of the year, perhaps not until the first quarter of next year.
And Brian, it's something that I've been asking some of our guests earlier this week, whether it's about oil, whether it's about retail, whether it's about any of the reports and numbers coming out. There's a problem. Some people tend to look at these things in snapshots instead of portraits. There's a bigger picture at play here, correct?
Absolutely. It's difficult to extract a trend from just 1 week's worth of data. Clearly, oil's had a nice move up here in 2009, up about 45%. Much of that probably is a reflection that economic conditions are starting to improve around the world, and that we'll start to see a demand pick up. But I think a lot of that's priced into crude oil presently, and I think we'll really start to need to see visible signs that demand is strengthening before we get much of an increase in oil from here.
And in oil, there are some stocks that you like, Whiting Petroleum, Concho Resources. Can you tell us a little bit about that?
Yeah, one of our themes for the second half of 2009 is to try and focus on equities that have visible growth via the drill bit. They're companies that are able to grow with their large inventories rather than having to go out and acquire growth. And we think that really this market is a stock picker's market. We like Whiting Petroleum. That's a company that has a lot of leverage to oil via its Bakken shale play in North Dakota. They have over 100,000 acres. And have experienced some of the best wells so far in the play. And we think the company is transitioning towards an organic growth profile and will start to really create some shareholder value over the next couple of years.
Brian, you're also looking at some natural gas producers as well. Tell us why.
Well, natural gas has lagged the entire commodity complex. It's down about almost 40% year to date. We think at some point natural gas is going to start to improve. We're intrigued by the fact that the natural gas rig count's down about almost 60% year over year. At some point, we'll start to see production start to come off meaningfully, and we think at that point we'll see natural gas prices come up off of this $3 level and possibly closer to the $5, $6 range. And a number of companies will have a good exposure to that price increase.
Michael, we have about a minute left. I wanted to ask you about a comment that we had today from Michael Lynch. He's the president of Strategic Energy and Economic Research in Massachusetts. He told us that the main problem with this market is the fact that there's too much oil out there. Do you agree?
That's true. There is an oversupply at the inventory level, but I think what's important is that if economic growth does return to prior levels, we will see a pickup in demand. We also have a situation where non-OPEC supply has been extremely sluggish. We have oil investment in 2009 will be down about 15–20%. That'll weigh on oil supply going forward. We think the markets will start to tighten significantly in 2010, and that's when oil will, in our opinion, average about $80 a barrel.
Brian Hicks, portfolio manager at U.S. Global Investors, joining us from San Antonio. Mr. Hicks, thanks.